So in technical analysis, candlesticks, they are a fundamental tool in forex trading, and they are used to visualize price actions and make informed decisions. So a candlestick represents a specific time frame. For example, we have the 15 minutes time frame. Okay, we have the 5 minutes time frame, the 15 minutes, the 30 minutes, the 1 hour, the 4 hours, the daily, the weekly, and the monthly. And if you click on this drop down button, you will see that we have the 2 minutes, 3 minutes, 5 minutes, and customizable time frames. All right. So, but the basic ones here, the basic ones are on the panel. All right. So each of these candlesticks represents the 15 minutes, because right now we are on the 15 minutes time frame, right? So each candlestick represents 15 minutes. So this red candle here is going to last for 15 minutes. So we have 10 minutes for this candle to exhaust and create a new candle. All right. So each candle represents the time frame on it. So for the 30 minutes, each candle here represents 30 minutes. So you can see the 15 minutes time frame, the candle here is different from the one in the 30 minutes time frame, right? So on the 30 minutes, each candle represents 30 minutes. On the 1 hour, each candle represents 1 good hour. Same thing with the 4 hours, each candle represents 4 hours. Go to the daily, each candle represents a day. If you go to the weekly, each candle represents every single week. Same thing with the monthly, each candle represents the monthly. For this, each candle is going to represent for that month, right? So we also have the open of the candle and the close of the candle. The highest point it went to and the lowest point it went to. In every candlestick, we have the open price and the close price. We have the highest point it went to and the lowest point it went to. For this bullish candle, this was the open price. You will know that for a bullish candle, the open price is always at the bottom and the closing price is always at the top, because it's going up, right? So when it's going up, when it wants to close, it will close at the top. Okay, so the highest point it went to, it went to this point. This was the highest point this candle went to, and also this was the lowest point it went to. All right, so this thing you see right here is called a wick. It is called a wick. So this is the upper wick and this is the lower wick. This is the lower wick and this is the upper wick. So this is also the body of the candle. All right, so this is the body of the candle. So the body is the main part of the candle, showing the open and close price, and the wick is either called a wick or a shadow, and the lines extending from the body indicating the high and the low prices, the highest price it went to and the lowest price it went to. So the bigger the body, the more strength it has. The bigger the body of the candle, the stronger it is. The smaller the body, the weaker the candle is. All right, so this is for a bullish, this is a bullish candle and this is a bearish candle. So this was the highest point price came to for this bearish candle, and this was the lowest point this bearish candle got to, and this was the close price. So like I said, for the bullish candle, the close price is always at the top because it's going up, right? The movement is up for a bullish candle, so the closing price is always at the top. While for the bearish candle is dropping to the downside, so the closing price is always on the bottom, right? And the open price is always at the top, and this is the body of the candle. So like I said, the body is the main part of the candle, and it shows the open and the close prices, and the wick or the shadow is the lines extending from the body, indicating the highest point it went to and the lowest point it went to. So this is the wick, and this is the lower wick, and this is the upper wick, and this is a bearish candlestick pattern. Okay, there are a lot of candlestick patterns, but here are some basic candlestick patterns. Okay, so first of all, we have the hammer. And the hammer indicates a reversal to the upside. It indicates a buy signal. So when you see a hammer in the market, it's indicating that the buyers are in control of the market, and price is about to retrace to the upside. It's about to go to the upside. Okay, so the next is the hanging man, and the hanging man, it also indicates a sell, and at the same time indicates for buys, because right now, as you can see, for the hammer, you see that price closes above, but for the hanging man, price closed below, which means that this was the lowest point price came to, but the buyers had to push the market to the upside. They pushed it, making price to close below here, right? So this just means that there are buyers in the market and there are also sellers in the market, but the buyers in the market are less than the sellers in the market. Okay, so this will indicate an indecision. If I may say, this will indicate an indecision because there are buyers in the market and there are also sellers in the market. So in order to take a trade around, when you see this kind of candle in the market, you have to align it with other confluences like a trend line, an equal high or equal low, also with a key level, a support or a resistance. So when you see such candles aligning with your confirmations, you will decide on what to do on the market, either if you want to buy or you want to sell when you see this kind of candle. All right, so this one is just the opposite of this one. So this one is an inverted hammer. This is a hammer and this is an inverted hammer. So the sellers were the one that pushed the market to the downside, making it to close, above. This one did not close below, because you see the market opened at this point. The market opened at this point. This was the lowest point it went to, and then it came to the upside, and the sellers had to push it back down to the downside, but they were not able to close below it because the buyers in the market are still enough to push the market to the upside. So this will indicate for buys as well, but the buyers are depleting. They are getting finished. That's the reason why the sellers were able to close below this point, but this still means that there are still buyers in the market. So if you see this candle in an uptrend, you can still take the market. If you see it in a downtrend, you might still want to short the market, like sell the market as well. So this is the shooting star. This is the shooting star, and it indicates a reversal. Is a reversal candlestick pattern. It is a reversal candlestick pattern. So when you see such a candlestick in the market closing below, because this was the highest point it went to, and when it got to this point, the sellers pushed it down to the downside, making it to close below here, which means that there are a lot of sellers in the market and the sellers are taking over the market. All right, so we have, this is a dragonfly doji, which means that the buyers were the one that pushed it to the upside, but they were not able to close it with a bullish, with a grain candle. All right, so there is a neutral candle which is also called the doji, and that one, it opens and closes at the same price where it's opened. All right, so this one, it opened at this price here. This dragonfly doji, it opened at this point and it also closed at the same point, which means it's an indecision candle. But you can still decide. If you see this in an uptrend, you might still want to buy the market, because the buyers are the one that push it to the upside. The sellers were in this market, they dropped it to this downside, but the buyers still took it to the upside. Okay, so same thing for the gravestone doji. The buyers were the one, since the sellers were the one that pushed it to the downside, it opened at this point, the buyers took it up while the sellers took it down, closing at the open price of the candlestick. All right, so this also indicates for a reversal to the downside or an indecision. It will serve as an indecision candle or a candle to the downside. So that's why I'm saying that if you want to take a trade based on the candlesticks, you should also align it with other confluences, like, because there are other chart patterns. So these are the basic ones. There are other chart patterns, but these are the basic ones. Okay, so we have a bullish candle and a bearish candle. This is called Maribozu, and this candle serves more like also a reversal or a rejection or an indecision in the market. So first of all, you see a big bullish candle, and then the next one is a red candle, which means that there are buyers in the market and there are also sellers in the market. So they're now deciding on who to take over the market. Is it the buyers or the sellers? But in such kind of a case, if you see this in a downtrend, you know that there are still more sellers in the market, and this is indicating sales. The Maribozu indicates sales are still in place. Sellers are still on the market. There are still enough sellers in the market to keep pushing the price to the downside. All right. So before using candlesticks to take any trade, you should have to align them with other confluences or other confirmations. All right. So I'll be showing you more advanced candlestick patterns for beginners. All right. So I'll be let me give you more examples of candlestick patterns. Here are a few candlestick patterns. We have the reversal patterns and the continuation patterns. All right, so this one is for the bullish move, like for an uptrend. So when you see a hammer, I already talked about a hammer before. So when you see a hammer in the market, it indicates for a buy, right? When you see an inverted hammer, also for a buy in the market. So when you see these three bullish three-line strikes, it's also a continuation pattern, and it's for an uptrend. You will see this for an uptrend. It's a continuation pattern. All right, so we have the bullish engulfing, and this is also for an uptrend. So this is a small candle, and the green candle is engulfing this little one, this little red candle, signifying that there are not enough sellers in the market, and then the market is about to go back to the upside. It's about to still, reverse back to the upside. So this will be coming from the downside. We're having a downtrend from here until we have this little red candle and this big bullish green candle. So this is signifying that now there are no longer sellers in the market. It's time for buys. Buyers are now coming in, taking over the market. All right, so that's what the bullish engulfing is all about. So we have the tweezer tops, which is also an indication for a buy entry. So when you spot such candles in the market, this is for buys also. So we have the rising three methods, and this is also a continuation pattern. This is a continuation pattern to the upside. So the market is trending to the upside, and this is just almost like a little candle tracing backwards, and then a big bullish candle appears, which means that we will see more bullish candles to the upside. All right, so we have the morning star, and this one price was coming down, creating a series of lower highs and lower lows. And we have the small doji candle here, which means that the sellers are exhausted and it's time for buys. After seeing this big bullish green candle, it's time to buy as well. Okay, so this is a reversal candle, and this is a continuation. This is a reversal candle, and this is a continuation candle. So we have the bullish mat hold, which means that it sees an uptrend. You see market came to the upside, retraced back to the downside a little, and then still going to the upside. Okay, so I hope this is understandable. All right, also this one is for an uptrend. Sorry, this one is for a downtrend. Market is is a continuation pattern. Market is coming from the downside, and then retraced back to the upside a little bit, and now going back to the downside. All right, So this is a hanging man, and as I said earlier, the hanging man indicates a selling pressure, but it also indicates that the market, the sellers might be exhausted. There might not be enough sellers, but they were able to close the market below the open price. Okay, so this is also indicating a sell pressure. So this is a shooting star, and this also indicates a selling pressure. So whenever I see this kind of candle in the market, it indicates a selling pressure, a candle with a long wick. All right, so when you see a long wick rejections in the market, it indicates selling pressure with it should be accordance with, it should align with a red candle. If it's a green candle, you should know probably it will go back to the upside. If it's a red candle, definitely to the downside. All right, so we have the bearish three line strokes. So this is a continuation pattern, unlike the bullish three line strokes. This one was for the downside, for the downtrend, while this one is for the uptrend. Because you see, these candles are small. These are small candles. But when you see a large candle engulfing these three little candles, it means that the market is going to the upside. So this is a continuation pattern. So price was coming from the upside, and now it's a little retracement back to the upside. All right, so we have the bearish engulfing. It's just the opposite of the bullish engulfing. So this red candle is engulfing the green candle. So the green candle is small, and you always find this bearish engulfing in a downtrend. So when you see such a candle in the market, it's indicating for selling pressure. There are a lot of sellers in the market than the buyers in the market. Okay, so we have the tweezer top, which indicates selling pressure as well. So you see that there was a green candle, but the sellers pushed the candle further down. The buyers came up here, the sellers also pushed the candle further to the downside, and we were able to close below the open price. All right, so yeah, so this also indicates a selling pressure. So we have the falling tree methods. So this one also indicates selling pressure. Market was coming to the downside, a little retracement to the upside with these three little green candles and a big bearish candle, indicating that market is still going to keep going to the downside. All right, so we have the evening star. The evening star candle also indicates that the market was going to the upside, and then all of a sudden the buyers ran away from the market. They took their profits, and then now the sellers are now in the market. So this cross sign you are seeing here just means that it's called a doji. This cross sign is called a doji, and it means indecision, which just means that there is no buyers in the market, there's no sellers. So the next candle that comes out after this doji was a red candle, which means that now there are sellers in the market. Sellers have overtaken the buyers in the market. So this candle means that they are going to keep pushing the price to the downside. Okay, so we have the advanced block. So the advanced block, you can see that these candles this was a big green candle, the next one was smaller, and the third one was very small, which means that the buyers are exhausting. They are getting depleted, they are depleting, they are finishing. So right now, the next candle, this also means that there are no longer buyers in the market. The buyers are almost gone. So now the next thing will be, you will see is a red candle to the downside. All right, so we have the bearish mat hold, which also means that there are sellers in the market. The market is coming to the downside because this is a continuation pattern, right? So the market is coming to the downside, a little retracement to the upside with these small green candles, and then you see a very big bearish candle indicating that the market is going to drop further to the downside. All right, so I now hope you understand this basic concept of candlestick patterns and how you'll be able to take a trade entry based on these patterns. So before, this candlestick should not be relied upon alone. You should not rely upon these candles alone. You should confirm with other confluences like a trend line, psychological level, and the chart patterns. We talked about chart patterns previously. We have double top, we have rising wedge, falling wedge, and flag pattern, and so on and so forth. So I hope you understand candlesticks right now, and if you feel confused a little bit, you can ask me questions in the comment section and I'll be open to answer you. All right, so thank you for watching, and then I'll catch you in the next video.